All right. Hello, everybody. Welcome to another month of our Maddox Market Musings. Welcome. And, we have a meetup group that is called now called rebranded the Maddox Market Musings. And today we're going to be talking about the bouncing market and the bouncing breadth along with that. We've seen some things. At first, we saw indexes making highs and breadth deteriorating, and we were noticing that negative divergence, but the market has quickly changed course and made new highs in the indexes, and we're noticing a lot of breadth, perhaps bottoming here. So we're going to go over a lot of those charts in this presentation. Okay, and so like I mentioned, please join us on meetup.com. This is where we've originally hosted our group, and you can find different updates there. You'll find the link to these meetups, these YouTube links there too. But we're a group of like-minded investors, and we try to foster a community where we can discuss the leading stocks. We discuss technical and fundamental analysis, and a lot of our work is grounded in How to Make Money in Stocks by William O'Neill. We use a lot of Investors Business Daily educational resources and various various platforms of theirs to help us with decision making, and we value a lot of their products. And we'll cover a lot of these concepts that are in this book, How to Make Money in Stocks, like the CANSLIM acronym. But we just try to connect with individual investors just like you and me, just to change our financial lives through concentration and market leaders. So I'll start this presentation with sort of a macro overview and general market update, and then we'll get into the exciting portion really with Roy and individual stocks, and we'll share some thoughts about what we own, what we're looking to buy, what's on our short list, and then as always, drop comments please below, and let us call out anything that you're interested in, flag any interesting ideas, and we'll try to go over as much as we can. So as a disclaimer, this is just a discussion. It's entertainment. It's not. It's our opinions. It's not financial advice. It's not a recommendation to buy or sell or anything. Please, do that at your own discretion and talk to your financial advisor if you're looking for financial advice. So this acronym, the CANSLIM acronym, this is something that's a key concept in How to Make Money in Stocks. It's something that it's just the key criteria that we look for in leading stocks. The C being current quarterly earnings per share of at least 25%, annual earnings growth or revenue growth really of 25%. Look for companies that are doing something new, something that is going to change the way we work, live, and play. Big volume, that's something that's very, key to us. That's something that's a big signature for some of the stocks that we've been buying the last couple of weeks. Big spikes in demand, because that is, to us, is the the insatiable demand of institutions that are piling into leaders. That's a key thing that we're looking for. Big spikes in volume. Leaders, we want leaders in the industry. A lot of times you'll have industry moves that are working, and that's great. You want that corroboration really of multiple participants in the same industry working, but you want to buy the best. You don't necessarily want to buy, you don't want to necessarily go into the second or third tier names. So we focus on the leaders. Now, institutional sponsorship, that kind of connects to that supply and demand. We're looking at what funds are on the list of what they're buying. The institutions are the really, really big money that are moving things around, and they cannot hide when they are interested in a stock, ultimately. And then market direction, that M in CANSLIM. So most stocks are going to follow the overall direction of the market. That's why we focus a lot on just the trend of the market, because if the market's in a downtrend, we're just going to have a hard time in individual stocks. Right now, fortunately, we're in this uptrend in the market, and things have perhaps might be improving significantly in the last week or so. So for us, a quick overview of what we do. We talk about these three pillars of our investment process: technical analysis, fundamental, and macro analysis. We talk about technicals first because that's usually the first sign of something changing, something important happening at a company, whether it's earnings or a new product or new leadership or whatever it might be. Technicals will give you that clue. Fundamentals, a lot of times you'll find there are there are ideas that you're following for many years, months and years, and then you'll have to wait for the technicals to tell you and give you that signal to um, to buy. So both those extremely important, of course. While technicals are super important, it does help to have the um, the fundamentals story behind you. That's where you know you're going to have the most probably juice in the move. When you have this idea, when you focus on ideas that have really significant revenue and earnings growth. And then macro, it's something that we always want to be aware of. Um, a lot of times the macro can become a distraction. So we haven't been focusing on that during this bull market run because, most importantly, we want to be able to, make money in the market and ignore a lot of the macro news. But, it's always in the back of our head at this point, there's really two things that matter to us. It's really just growth and inflation. Um, and then overall kind of how those two inputs go into the Fed's decision making, and whether or not they're going to start easing, and a lot of times, with that easing comes a better market environment. So again, we're not focusing a whole lot on it, but it's always something we're aware of. And here's just a list. You can take a snapshot or review and think about things that you want to include in your technical analysis toolbook. This is a real good list. I don't think it's too much. It's not too little. It's for us, it's kind of just right. As far as the things that we're looking at for technical analysis. The trend, the most important. These are three time frames. These are three time frames of trend that we look at: the short, intermediate, and long, and how we kind of consider the the health of that trend on every time frame. Breadth, that's what we're going to talk a lot about here. I've probably got like 10 slides where I want to go over some things about the breadth and where we might have just bottomed in this breadth decline. And then sentiment, just we'll touch on it. There's nothing super extreme. There are a couple of setups I want to call out with sentiment, but that's it. And then ratio analysis. One of the things that has been highlighted and we've noticed a little bit on the financial Twitter world this week too is been talking about the concentration, right? And it's the concentration of the market. So we'll look at the ratio there, the Russell versus the S&P, for example, and how we've gotten at this multi-decade low, or I guess multi-decade high of concentration, with a lot of these Max 7 names still holding up a lot of the market cap of the overall market. And then analysis, again, just as part of that 3-pillar approach. CANSLIM, that's generally, this is kind of a good, also high-level checklist of things that we're looking for. So take your time to, review CANSLIM, know these things if you're unfamiliar. The really important things that we're looking for to help us in our stock selection. Okay, and so now I'll get into a little bit about the overall market. This is the just annotated chart I've been updating every month now, just with news items and kind of trying to remember the context of everything that we've been going through over the last several months. So you've got these big red circles in the bear market. That in the bear market where we've got this the big tariff announcement where those numbers were huge, and then quickly 5 days later Trump's pivot essentially here, second best day ever, and then the follow through day, which for us was that signal to start getting exposure, and that's when we started digging ourselves out of a bear market there. All these other things happened, okay, and we continued to fight through these things. For us, the interesting thing that happened this past month is we had these pretty ugly 2 days. We had this ugly outside day to the downside right here, and that came alongside really strong Meta and Microsoft earnings. And I believe that also came on the same day as a Fed meeting, or the day before was the Fed meeting. And then on Friday, that's where we had this really negative jobs revision thing, right? If you were paying attention, that was a Friday where all of a sudden, they revised lower the last 2 months of jobs. And that was a bit frustrating, alarming. Trump wants to fire the BLS person. And what's mostly frustrating is getting it wrong, right? I don't know, there's probably not any political angle there, but it's frustrating to have it wrong because you wonder what the Fed would have done, right? If it had even close to accurate information. And everyone's had the same complaints for years, right? About why we can't have decent data, real-time data, for this. There are alternative data sets for inflation, which are very good and much better and more trustworthy. So that's great. But, jobs data seems to be a little bit harder to come by. So that's the frustration there. But since then, we did bend with the market as we broke that 21-day right here. That was a bit concerning. But we rallied back hard the last 6 days, and it's pulled us back in as the index has made all-time highs again. So that's where we are. We did raise some cash, and we started buying again as stocks were breaking out. We had big earnings for a lot of different things that we'll go over. And overall, another really strong day today to all-time highs. Okay, and so here's a look at the FFTY, the IBD 50 index. This is, this is also interesting. It's taken out these highs from February. Back in February, this is when we were, again, Roy and I'm sure we're 100% long on this day, because to us, that's a signal, right? That's the breakout signal in the stocks that we traffic in. That's the breakout signal in growth, high octane growth names. And that ended up being a complete head fake in the, 3 days before the start of the bear market decline. So, we quickly raised cash and everything, but, we fought back, and are taking out those highs finally. So, very encouraging. And something to highlight here too is, yes, this FFTY has rallied significantly, and you've probably made some good progress, yourselves in a lot of names. But in the meantime, you see these gyrations in the last couple of weeks. This is what was giving us some pause, as far as getting too aggressive until more recently. But you have these pullbacks, and when you're in the FFTY stocks, you get this move from 34 to 32. Those are 7% pullbacks intraday in just a couple of days. So for us, that did keep us somewhat cautious over the last three weeks until, again, this last kind of rally. I thought this was interesting. Roy shared this with me in some of this file dumping we do when we share different things with each other. And this is from Chiavaco Capital, where they've got some good commentary. But I thought this was a nice, just a reminder, a random kind of reminder, that you get this volatility sometimes. You get those 2-day pullbacks that are kind of nasty. It can be painful, especially, if you're on margin or you're really highly concentrated. That 3% dip in the index, right, that we got, just 3 or 4%, can turn into 10% just in individual stocks, and 20% if you're, on margin. So just keep that in mind. It's, you get a lot. These are very normal corrections, and you don't know, and in real time, if that 3% correction, we didn't know if, it was going to break the 21-day and then continue lower, and for who knows why. You don't necessarily need the reason, but you're going to get lots of these pullbacks. And I thought this was really good, just interesting info to give you that context, how often these things happen to us. And then some more context I wanted to go over is this cycle work that I think you've probably seen some people too. If you're deep into financial Twitter, you've seen some people talking about the cycle, how, okay, we're due for a pause in the cycle. This is a composite cycle looking at the typical 1 year and the 4-year presidential and the 10-year decennial cycle. And based on this cycle work, it says, okay, we should pause and then have a year-end rally. So we should chop around for 3 months. Who knows, right? We're not making a whole big decision on this, but this is what, this was in the back of our head as well when we had that initial pullback right on schedule, it seemed, with the cycle work. But since then, with the indexes making new highs, you just can't really, you can't argue with a lot of the strength in the market that we're seeing. So here's something we were looking at. We were noticing is that breadth deterioration. The decline here is this is the S&P 500 stocks above their 20-day moving average. So this is the real short-term breadth oscillator that we look at. And since peaking, well, really in May, right, the market has continued to go higher. Okay, while breadth has not made new highs. Not super uncommon, really, but the point is, if this is just a very normal type of pullback, which it turned out, we think it turned out to be, that's probably enough, right? We saw it decline to under 40% of stocks below their 20-day, and now we've bounced. We saw the decline here in the stocks above their 50-day. It hit 50% or so. In a bull market, and we think in a bull market trending market, that it looks like that could just be enough. That's all we needed to see. And then here's the stocks above their 200-day, where it took a break. Didn't quite hit 70% of stocks above the 200-day. Pulled back a little, and we think if as long as the market cooperates, it's going to continue higher. And you can see in 2024 where we sort of lived at the 75% level in that pretty strong bull market. And then stocks above the NASDAQ stocks above their 20-day, we'll go over those oscillators too. We saw some more much more weakness in that oscillator where it hit 25% or so down here. So a lot more damage was done in the NASDAQ. And with us being in these sort of high tech, high flyers more often than the S&P diversified real estate financial sectors, there was some real weakness across the board in a lot of stocks that we owned. But 25%, I mean, again, in a normal pullback, good bull market, you don't need to see much more. You see in April, we came to like 10-15% of stocks above their 20-day. You see in August when we had that nasty, I think 15% correction, we got really low down there too. We think that's probably the damage we think is enough right there for a continuation of the bull market here. Similarly, here's the NASDAQ stocks above the 50-day moving average, came in here at 40%, bouncing a little bit. And then longer term, the NASDAQ stocks above their 200-day moving averages came into 35% or so. And, who knows where this can go? You'd love to see this continue to grind higher and, hit 60, 70%. But in 2024, we really just lived at 50% in that 40 to 50% range. So not a huge call out here, but we think the weakness has been enough. And a couple of reasons too, additional reasons in breadth. This is that oscillator we look at. We talk about the McClellan oscillator. We did hit that oversold level. So, oversold under minus 150 here. Hit minus 180. That's on the New York Stock Exchange. So, a different kind of basket too. We also look at the NASDAQ McClellan oscillator. Again, more tech heavy, often more things than that. Very, very oversold, hitting minus 73 right here. And, you can see at the bear market lows be at minus 78. So quite washed out, really. And quick. That's the thing, quick. 2 days. 2 days, we raised cash, we bent, we hit support, and we bounced. And so with that, you can see if that's the shakeout you get, that is pretty. That was a pretty strong shakeout and swift. So bouncing off that though, very supportive, very positive to see. And so now I'll get through a little bit of the sentiment we're looking at. Here's that NAAIM Investment Management Survey. Last week, we got that survey result where they were 90 active managers are 96% long based on their survey. We've highlighted this in the past that, north of 100 sort of, can be a concern. And we found it's done a pretty good job giving us good warning signals when we've hit 100%, that we're due for a bit of a pullback. You can see the number of these that have worked. It was interesting. We hit 99% back in July, and or sorry, this is actually June. At the end of June, we hit that 99%. So that was close. We realized it wasn't 100%, but it's a signal that we've respected over the last couple of years, and the market sort of ignored it. Here we are 2 months later, we're making new highs, and the market ignored it. So it's not it's not a perfect timing mechanism, obviously, as nothing is, but maybe it's a change, right? And we were talking about how, okay, if we're in this, we might be entering this really, really strong brief period, right here where the Russell's kicking into gear and breadth is improving and things are working. And you can see, near the end of 2020 and early 2021, when we had like a really strong period, sure, it was volatile, right? You see these volatile bars here, okay. But you had many, many weeks near that 100% level. So, we are aware of that. If we do hit something, if we hit a period, a little window here where it's really strong, we may see this kind of environment again. So that's kind of how we're approaching it right now. Here's a rather positive development in sentiment and interesting. The last couple of weeks, we've seen this bullishness come down. We've seen bearishness pick up. All the while, again, the index is rallying. And this is the first time in a while that you can kind of see this. I know it's small here, this net number. This is showing us that the bears are outpacing the bulls. And I think that might be 1 or 2 weeks in a row now. But very interesting. We love to see that. That's great for us, right? You want to be fully invested when you've got a bunch of bearish people. And, that's really, we find that very positive to see here. Okay, and we'll talk about concentration. This is a snippet we got from I guess Minervini and Ned Davis research, and people flag it. It's kind of just a talking point. I don't think it's overly. I don't think there's much to make of it, to be honest. Like not a whole lot. We're not making decisions. We're not making decisions based on, oh my God, the concentration's here. Sell. That doesn't make any sense, but it's whatever. It's a talking point. Here we are. Top 10 stocks make up 39%. If anything, when I see this and I see this worrying people, it's just another reason to worry. And I think it's the more reasons to worry, the better, as we continue to march higher in the market. So we're clearly not in a 2000 environment. This is where companies didn't have any earnings. They had no earnings. And at this point, the top 10 market cap stocks have, reasonable PEs and massive earnings and are investing hundreds of billions of dollars in AI. So anyways, this is not something that alarms me, but it's interesting to flag. It is very interesting to see all this value accumulating and concentrating to these mega cap players. Here's kind of another look at that in a different way. This is the ratio of the Russell to the S&P 500. So those small caps have basically it's saying they've underperformed over the last 10 years. And we're seeing this ratio get so far out of whack that the history I had for this, the IWM versus the SPY only went to 2000. But, it's kind of the same picture that we're showing, right, where it's highly concentrated. Same thing happened in 2000 where you just had things, blowing off like Cisco and whatever to new highs. And you just saw a lot of internet companies, right, capturing a lot of market value. So we've seen that. And so what we saw today was for us was interesting. I'll go over a little bit of the Russell move today too. But as breadth was getting so bad and this ratio is getting so low, it's possible finally, after 2 years, if you've been with us for 2 years and you've been, people have been calling for this rotation into the Russell, maybe we're about to get it. Maybe we can actually get some significant, rotation into Russell small cap stocks. And something that I think, that calls for that too in a meaningful way. Something I track. I've started tracking the futures positioning from the commitment of traders data. And again, that guy that got me onto that is Jason Shapiro, Crowded Market Report. He always looks for these things, and what you have here is the blue being the speculators. When they become crowded in a certain direction, it's worth betting against that crowded position. So right here, the last week we saw speculators very net short the Russell 2000 small caps. You can see they haven't been that short since the bear market low in October of 2022. So I think with that, that setup going into this morning, I think was really strong with the CPI report, because they seem to be really rate sensitive names too, these Russell names. So, we did have a position in the TNA yesterday heading into the CPI report. And with this kind of background, I think the risk reward made a lot of sense to put that on. So love to see this. And, with that, we did get that really good response today from the Russell, following the CPI and everything. So while we were looking at, everyone was looking at the same stuff saying, okay, breadth has really been declining. Breadth is, weakening. What's going to happen? Oh, the market's going to roll. Well, the other alternative is that breadth just improves. And, this was day one, perhaps, in the step and a step in the right direction to see that breadth improve. And, these things happen all the time, and we'll navigate through different pullbacks, and there will be, multiple more pullbacks over the next 12 months that we're probably, selling things through. But, the longer term context, despite 2 weeks of declining breadth, okay, the longer term context I wanted to remind people of is this breadth thrust off of a bear market low, really, really well timed, is this April 24th Zweig breadth thrust. And we've talked about this over probably the last 3 or 4 meetings, because it's something that doesn't happen a lot and has a really, really good track record. So, keep that in mind when you're worried, when you're reading headlines about breadth declining and all this stuff. This is the background. It's that we are 4 months into this Zweig thrust where we see a lot of participation happening, in the market here. So keep that in mind. Then the reason why we keep that in mind is because we're about 3 months in since that signal, or I suppose, 3.5 months in, and we had a 16% move 3 months following that signal. And on average, we have 12 months from a signal, we have 25, 26% moves in the indexes. And so that's why, that's something we need to remember. We're maybe halfway through this index move. So we've got 6 more months, or we've got 9 more months. I guess we're not halfway, but we've got about 9 more months, and maybe 10 percentage points, maybe more, right? 10 to 15 percentage points more to go in these indexes. And then, with that hope, you should be able to find individual stocks that go twice that, over the next 9 months. So that's the positive background. Something to consider perhaps cautiously is you've got this 16%, 3-month performance. That's far better than the average and the median. Okay. So maybe it happened really fast. Maybe it's too much too fast. I don't know. We'll see. You just take what the market gives you, what's in front of you. The other, alternative scenario is, look at these couple of really strong 3-month returns, like in 1982, and 12 months was superb, right? 45%. And then same right here in 2009, we had that 16% moves, very similar 16% moves. So the other two really strong 3-month performances. 12 months later, from that thrust signal, we were up 47%. So that's the other question, right? Obviously, it's, who knows? Is it too much too fast? Maybe. But does strength just beget more strength? Is that what we're looking, is that the potential here? I think that we're kind of leaning right now. Roy and I are becoming more and more optimistic and leaning in that direction that, man, we might be off to, we might have a, real strong end of the year. So yeah, we again, Roy and I, we were just talking more about the Russell move and thinking about, okay, if this is in 2020 and this is when, people made a killing in the second half of 2020. And this was that really easy dollar environment that I don't know if you can say we've seen. Maybe we've had a few months here and there, right? We've had probably 2-3 month periods where we actually had an easy dollar environment. I think in 2023 we had one off this low, and then probably post election, a little bit leading up to the election, we had like a few months of easy dollar. But we're very interested in the Russell going to new highs and entering another one of those easy dollar type of environments. We would obviously welcome that environment for us, and we're going to be there to capitalize. So yeah, that's the possible context of what we're looking at. And this is the chart. I pulled it up. I can't remember honestly who shared this one, but you can see the source there from Goldman Sachs. This is the background, and this is what kind of changed the market tone. It seems like with a lot of stocks reacting very positively to earnings. Well, it's because we had a lot of surprises, and this 63% number I think is a little low. I think if you were to update this at the end of the earnings season, I think it'd be closer to like 80% of stocks beating expectations, and that comes off of the tariff headlines and everyone cutting guidance and everything. So the bar was lowered, but we haven't seen this many surprises since 2020. So that's kind of what we're looking at. We saw some earnings surprises, and we'll go over again. This is the last slide we're going to look at. Roy's going to go over a lot of those stocks that are on our radar because, that's what we're looking for. We're looking for the stocks that are beating and raising numbers. And so a lot of what we've been buying are things that are up 10, 20, 25% on a really, really positive earnings reaction. So I suppose with that, I will pass it off to Roy, and he can go over some individual stocks. Roy, I was trying to think. There was one other point I was trying to make, and it has escaped me before I handed it over, but I cannot think of it. Maybe it'll come to me about the overall market, but not important. I'm going to hand it over to you, Roy. You need to reshare your screen again, and I'll put it up there. What did I miss? Did I miss anything, Roy?
No, I don't think so. Great job, Wes. Am I on? Am I ready
I'll
to
put
go?
it up here. There you are.
Okay, thank you, Wes. And again, welcome everyone for those that are attending live tonight. And again, those that are going to attend by watching the recording, the rewind of the program tonight. So we certainly thank you for participating, for visiting with us, and as we share, hopefully, our knowledge with you so that we can help you and equip you to become better traders, better investors. Okay, I wanted to start off just to also piggyback on just some of the things that Wesley has talked about. This is an annotated version of the NASDAQ, and you can see you can take a screenshot of this. I'm going to give you an opportunity to take multiple screenshots of the stocks that we're invested in, the stocks on our buy list, the stocks that we're interested in, that we're stalking. I think all this information would be useful to you if you go back and you study the annotations very carefully, because what this visualizes and depicts is this is basically how we handled the bear market. And this was really, I think, the second quickest bear market reversal from the bear market to making new highs. I think this was the second quickest bull market that we've ever had, that we've ever experienced. So just to give you an idea, we exited the market there in February. You can see about 4 or 5 days off the top, we were 100% in cash, and we missed the whole move down where you can, obviously that's when Trump was talking about tariffs and just talking about a lot of things at the beginning of his presidency and so forth. But we stayed out of the market completely. I think we had about a 7% drawdown in the market. I think came down 27% on the NASDAQ, and we were able to sleep like a baby. And what this graph depicts is it shows you how what's a proper way using incremental exposure in terms of getting reinvested. So this we depict this on the chart. So we hope that you'll find useful. What is very interesting is that when you get in a bull market, tops happen when you have these outside days to the downside after a solid move up. And you can see that this is kind of how we maneuvered, over the last few months. You can see we had this big engulfing pattern right here where we went from 100% in to 57% in cash. We came back. We also moved back in 100% in on the move to new highs in the averages right there. And you can see just recently over the last 2 weeks, this is pretty much how we handled things. And you often hear the term, you've got to manage risk in real time, not basically what you think, what might happen. You've got to be there every day, every moment, so that you can be there to make these decisions in terms of reducing the volatility in your portfolio and preserving the gains that you have achieved in the bull market. So you can see you can see on this outside date of the downside here, we went to 50% cash, followed by a move where we took another 25% off the next day because we had this violent move down. So we were 25% long. Now, over the last 10 days, we've gone from 25% long back to 90% long. And now the market, again, it's powering ahead. So that's what we're doing right now. And that's where we are right now. Let me just give you an idea. And Wes touched on this a little bit about the Zweig breath thrust, where we're only 4 months into this. So we probably, again, we think we probably have another 8 or 9 months before the market essentially, peaks. And a lot of things can happen when you have that last move, when you have that easy dollar environment. It would not be unreasonable to have a 25 to 50% move on that last move if where we have an easy dollar environment. And let me show you what I mean. Let me show you what 2020 looked like, just so you can go back and take a look at this really at your leisure. So let me change the date here to 2021. And if you've got a program like Market Surge, this is what we use, and where we annotate what we're doing and when we're doing it. It's for it's really homework that we assign ourselves to, and it gives us color and context in terms of what are we thinking about the market at these various times. And the 2020 bear market was right here in March of 2020. And then we had this powerful move up. But notice this, we actually had a move from 6,600 to 12,000. So, the market went up about, you almost doubled right there during that period of time before we sold right into that. And that we happened to nail this at the top and move to 90% cash at the top because of a lot of the indicators, technical indicators that we look at. and based on what leading stocks were doing at the same time. And so then we had this a very volatile, sharp correction, and then we annotated here where we added exposure and actually took exposure off and so forth. That easy dollar environment that Wes is talking about, it's when the indexes go to new highs, like right here to right here. That last move, and you can see this lasted about 4 months. So it would not be unusual for this market to power ahead and then have a pretty brisk correction all the way back to the 50-day. So you got to be prepared for that, because we will have the correction back to the 50-day. It always happens. And so, you've got to be aware of that, and you've got to manage risk in real time. But this period right here, from November to February, that is when we knocked the cover off the ball. And that was that last leg before we went into that bear market in 2022. So just keep that in mind. And so I just wanted to cover that to give you that context. So the real money is yet to be made, and we think it's, you've got to ask yourself, is this a half full or half full or half empty market? And we think we're going to err on the bullish thesis based on the indicators and technical anecdotal information that we're seeing. But more importantly, we're going to use the leading stocks and what the leading stocks are doing to help us navigate through these periods of time. So that's going to be very important. So that's where we are right here. We would expect this move. I was looking on the S&P, and it translates to really 6750, where we think this market might go before it pauses on the S&P 500. So just wanted to give you that color and that context. And with that, let's move to the fun part of the presentation, which are covering individual stocks. So let me pull up our portfolio. And now remember, everything that Wes and I are talking about today, we are not providing any investment advice. Be sure and read that disclaimer again. Consult your own investment advisor. We'll answer any questions that might be posed to us tonight, honestly and truthfully, of course, but you'll have to make your own decision. So what we are doing personally doesn't necessarily dictate what you should do, because you need to manage your portfolio and your money based on your risk and investment objectives. It's as simple as that. So this is the portfolio, and people seem to enjoy this. And we post a lot of what we're doing. We try to post every time that we add a position in our portfolio. We try to post it on Twitter, and we do a pretty good job. I think an excellent job, in fact. And we do an excellent job in communicating to our clients and people that are following us on FinTech and so forth. So this is our portfolio right now. This is what we own presently. Our largest position happens to be IBIT. So you can take a look. And as we go through these 18 positions that we own, and I'm sure there'll be some input from the audience. There'll be some input, and I also have about 10 or 11 stocks that we're stalking, that we're interested in buying when we free up money, or if we sell something and buy something else, or if we happen to add another 1 or 2 positions and so forth. But these are the positions that we think are the true market leaders, or some of the true market leaders. Probably 90% are true market leaders in the market today. And so that's how we maneuver, and those are the types of stocks that can lead to outsized gains, in your portfolio. We're up about 13% today, year to date, and I think the S&P is up about 8.5% or so. So, what we strive to do, and what we think all active investors should strive to do, is double the S&P 500. That's what we're trying to accomplish for our personal portfolios and for our client portfolios as well. And we've been able to do that consistently over the last 5 years. So you can take a screenshot of this, and let's just go through these. And rather than get into all the various specifics in terms of when did you buy, when are you selling, what makes you what makes you change your opinion on a stock, we just want to provide these to you so that you yourself can study these on your own time, and you'll find that there's a theme out there, and the theme is most of these exclusively are in uptrends, and most of these are near 52-week highs or all-time highs. Okay, let me pull these up and change them. Now, there's no question that that concentration provides more upside returns, but there is more risk, and that's why you've got to manage your positions carefully in terms of selling when they really break down and so forth. One of the big mistakes that many people make is letting small losses turn into large losses, and in many cases having devastating losses. At some point, you got to pull the ripcord. And for us, we don't want to lose more than 1% in any one position. That's really our maximum loss that we ever want to take. And I think that's only happened maybe 1 or 2 times, in the last 12 months. It only happens like 1 or 2 times really a year, really. Okay, so this is AI. This is an AI stock, semiconductor stock, that is right in the middle of providing the picks and shovels for data centers, and that are powering this AI revolution and powering these large language models that are going to be ubiquitous, that are going to change the way we live, work, and play all throughout the land, not just in the U.S., but all over the world. So we entered this position on the breakout to new highs right there. So we took a 5% position in this stock as it went to going into new high territory on big volume. That's what provided the impetus for us to enter the position. What got our attention were the earnings growth. And we owned this stock way back here before it got hit in deep sea. This was the deep sea break that caught everybody surprised out of the blue right there, the end of January, right there. So this is a stock that was a leading stock, put in this nice cup, and then it broke out on earnings. And you can see the triple-digit numbers. We found that the biggest winners that we've incurred and that we've participated in the past, it's been these stocks that have had triple-digit numbers. So you can see the earnings growth: 238%, 267%, 208%, 999%. Remember the formula that William O'Neill shared with us is that he found that the great winning stocks had earnings growth of at least 25% and revenue growth of 25%. And this, we try to find the very fastest growers because we think that's the best merchandise. So we found that our best stocks have occurred when we've had stocks that have had triple-digit numbers. So there's ALAB. ANET, Arista Networks is the next one. And ANET it's in that same picks and shovels area. In the marketplace, you can see the stock just broke out and on big volume, on a great number. And this, we think, and we've seen quite a few of these gaps up, these gap ups, and what we would look for these stocks technically to do is we would expect these stocks to go up 20 to 25% from the breakout point. So our targets on all these stocks that are making new highs, it's 20 to 25%. If you were not in the stock before the earnings, certainly if you were in the stock before the earnings, you would have had much higher profits built in. But with the volatility that we've seen in the market, it's really a coin flip in terms of holding the stock into the number or not. And because we didn't have any cushion, we had to wait till the number came out, and then we bought after the number. So you can see great numbers here: 30% numbers and earnings growth, 25% revenue growth. And this is a significantly large company. You can see the market cap's $177 billion. So this isn't, this isn't a very small company. It's a major company that's really changing the backbone, the build out of the AI models. Now, a stock that we bought in the same manner, we bought this AXON that had a 67% earnings beat, which came when this was, only, you can see 6 or 7 days ago. We took a half position right there when it reported its earnings. We pressed it to a 5% position, and you can see it's retaken and filled in the gap from the breakout. So for us, I think we're down on this stock about 5 or 6%, and it's right where we're very close to selling the position. And it had a great quarter. The stock had it had the variables that we're looking for in terms of great earnings growth, great revenue growth, and and a wide array of products that are used all across the world, actually. But it really needs to hold right in here. And you really don't want action like this. You don't want a stock to break out and then come all the way back. So we've got this on a real tight leash, and we'll see. This stock should be bottoming right here. If the stock doesn't bottom, if it didn't bottom today, we'll probably kick the position. But we did hold it to the close, although we were considering selling it. So we were giving it one final shakeout to see if it holds. The next is BMNR. This is one that we absolutely crushed. This is the company that that selected Tom Lee as the chairman, and this is the MicroStrategy effect, a full effect that's taking place with Ethereum. So you may or may not know that Ethereum is the backbone in which all these smart contracts are being developed. And these smart contracts are utilized to build technology products like stablecoin. Stablecoin is to the blockchain is what email is to the internet. And this is brand spanking new, very new. And this is what we think is going to be the currency, the real currency that's backed by the U.S. Treasury, backed by government U.S. Treasury bonds, that we think is going to proliferate coming out of this market. And as America is embarking on attempting to become the leaders in artificial intelligence and in cryptocurrency in the world. So we happened to buy this stock 1, 2, 3, 4 at $34 about 6 days ago, and we sold 75% of it yesterday at I think about 70%, 70, 80% profit. I think we had a 90% profit at the top, and we kept 25%. So we got a 25% position here. We don't think it's over, and we think that we think it might consolidate a little bit, but we didn't want our profits to dissolve. And it had a fairly weak close, but we sold 75%. We don't necessarily think that it's over. And if you take out yesterday's high, it's game on again. We were thinking that this had the potential to go to $100, but we'll see what happens, because Circle, which is primarily involved in the stablecoin market, they reported earnings yesterday. It was a really good quarter, but they dropped the secondary on you after market, and the stock's down $10. It had a poor close today, and that's many times that's what happens when you have big major moves in companies. They want to raise money, raise cash. That's dilutive. That normally temporarily makes the stock come in as more suppliers abound. So we're going to be watching this carefully, but we have a terrific profit in the running position that we're left with right now. But we definitely don't think it's necessarily over, and we have such a sizable profit that we can give this a little bit more latitude because we backstopped it.
And Roy, yeah. I got my little one here for a couple minutes, but I was gonna just add, I love the I wanted to buy this stock down right when they announced how big their secondary was going to be, and we were talking about this earlier today. We think 25 billion is it's just about what all that they need potentially, which is nice, right? So you can, to some extent, hopefully the overhang is out there, because we knew they were going to dilute and they were going to issue shares and buy Ethereum. That's the whole game plan. But maybe that's all they need. It's great that they did it all. If they tried to do it all in one day, rip the Band-Aid off, say, here's what we're doing. And, they want to do it in huge size so that then, they can kind of squash the other copycat people too, right? Like, we don't need 2 MicroStrategies. We don't need 2 BitMines. So I kind of like the idea of them doing that and saying, forget SBET, right? Whatever that random SBET name, company is. Come to us. We're going to be the Ethereum treasury, the real Ethereum treasury provider. What do you call it? The only game in town for that should, hopefully is just them. So.
And what Wes didn't mention is that they came out yesterday and announced that they were going to do a $20 billion exercise of doing this. Just what MicroStrategy has been doing for the last 5 years.
Right.
And again, this has got the right people in it. That's sort of one of the reasons that we took a position in it, because Tom Lee, as you know, he's all over the news. He's a great strategist. Very, very probably one of the top strategists on the street, and very thoughtful in his approach. You also had Bill Miller of the legendary Value Fund from Legg Mason. He ran that fund for 30 years. He took a position in it. And also Peter Thiel, remember, he was one of the founders with Elon of PayPal. Peter Thiel has financed all of these companies, across the spectrum, all these growth companies. He's right in the middle, and he's got a 10% position, I believe, in it as well. So you have the right people. And then we think it's going to be the dominant company, in the Ethereum network.
Lastly, too, we don't have to harp on it too much, but even though it is like a big focus for us, this stock, just because of the strength, but it's a leveraged Ethereum play, right? So that's really what you're looking for. And Roy, we were talking about like ETHA. I know that broke out to all-time highs, and actual Ethereum is sitting here at like 4,600, and all-time highs are like 4,800. So we're just, that's the that's the thing that we're looking for. It's the leveraged, Ethereum strong breakout. And it's interesting when you get this. It seems like we've got this opportunity to. We did great in MicroStrategy last year, and maybe we get this chance, a very very, similar play in this
Yeah.
BMNR. So it feels familiar, um, with all these same things happening. Bitcoin was hitting all time highs. Now we've got Ethereum, knocking on the door, all time highs. So all that stuff is, it feels like we've seen it last year.
Yep, and you can see that this is just looking. This is the ETF of Ethereum that just broke out to a 52 all-time high, 52-week high. When you have this type of chart pattern, technically, it translates. This translates to like a 60, to a 60 to $80 uh, price target. So if you get Ethereum moving, and Ethereum has been outperforming Bitcoin recently, you get that going, you're going to see that BMNR presumably go much higher than where it is right now. So that's our investment thesis, right now. BWXT, there are a few of these power companies, and the power companies you obviously are aware of the electricity and power needs that these power companies are going to have to present for the network, and these are really the leading companies. And BWXT, you can see it's a $16 billion company. It just broke out, and look at this beautiful, beautiful cup and handle formation. And we would, again, you can see, we went from 25% long to really all in the course of the last, 6 days, because all these stocks that we're following that are breaking out on tremendous volume and, that are up 10% in price, where volume exceeds 300%, those are buy signals for us. That's when that occurs, when we have those type of parameters. Those are normally launching pads. They aren't places to be where you should necessarily sell. You should necessarily consider them as to be buys. So PWXT is one of the strongest. We are also looking at this TLN that's in that space as well. And you can see where this stock just broke out. See, a couple of weeks ago, moved to new highs, came into the 10-day, and now it's turning up. A few others in the group that you may consider: Vistra, VST. Look at that nice breakout, and earnings are out of the way. The difference between a couple of these is this is a larger company. This VST, it's a $71 billion company, versus that TLN is only $17 billion. So, but this has got the right ingredients, the right chart pattern here, and you can see that this stock is at all-time highs as well. When you look at the stocks, again, using the daily, weekly, you can see it's just broke out, and this is what's known as a green line breakout that Dr. Eric Wish talks about, where the stock makes a new high after consolidating for 3 months. So you're just getting the breakout again right here on that stock. So that's a very powerful setup as well. Another stock in that group might be NRG, and NRG had the same type of chart pattern, but they reported earnings and the stock sold off on the number. And now you can see the stock is sort of trying to find its footing right here. But that's another one that you might consider in the group. CEG is another one. This is really one of the big, it's the big nuclear energy alternative company. So this is one that's leading in that group as well. Okay, the next stock is DoorDash, and we're all familiar with DoorDash and how easy and how convenient their service is. I find, DoorDash, in my area anyway, to be much better than Uber Eats. And, I think this company is well run, and the CEO's, he's highly thought of. You can see that this is the reason that we own the company. Look at the earnings projections here. Earnings were, they just reported 271%, 833%, 185%, 300%. So the stocks can have 743% projected earnings this year, followed by another 60% next year. This is what these true market leaders look like. This is the kind of power that you get from an earnings perspective, that you get stocks that can go up two and three fold. And if we have that type of move in the back end, it would not be surprising to see a stock like this go from $250 to $1,000 in the next 12 months.
Yep, and just again, this is anecdotal. Personally, I just find myself using it more and more in my life, for the convenience factor, and it's a lot more than I expected. I know when I was in my 20s, I thought, oh, I'm not going to pay for delivery, right? I'm not going to pay the $5. And now the tech savvy millennials are growing families, and the convenience is kind of priceless to just have whatever it might be, versus getting people into the car and trying to pick up everything. So anyways, I've been using it at least once a week the last year, I bet, at least.
Thank you, Wes. And take a look at the monthly, and from the back of the envelope in terms of projecting, where the stock might go. And this is from its IPO, 5 years ago. You take the highs and you subtract all, the move from the high all the way to the low, and then you project that from the new high to give your next objective price target. So that suggests that this right here should be a $460 price target. So, the real move is made when the stock gets to all-time high territory, which just happened this month. So, you might say, well, I missed this whole move. Well, maybe you did, maybe you didn't, but the real move is now going to take place, we think, from here, over the next year or so. So it's not, it's not how low you buy, it's how confident are you that you're buying it properly, that it might and should lead to, profits in your portfolio. So we think it's very attractive. And we actually had a nice profit in this going into the number, a big profit into the number, and we held it. This is probably one of our biggest winners, and you can see a GE Vernova, and this was a spinoff from GE, and they are right in the middle of the build out and the infrastructure, and for data centers, for power plants, for new construction. They're in every sector that you might imagine in terms of the power systems and grid area. In fact, they own 30% of all the gas generators in the world. So that's how dominant and big this company is. This is the leading company in this whole area, and we're well over 50%, I believe, in this stock in terms of our profit that we've got in it. So this is exactly what you want. Very, very solid numbers. Look at the numbers. They're going to almost double from $7.61 this year to $12 next year. $178 billion market cap. See, this is I'm showing you, how important it is. The larger the market cap, the more liquid it is, and the more quality and of institutional quality that the stock possesses. So don't look at a stock and say, oh man, it's $657. I can only buy a couple of shares or 5 shares or 10 shares or whatever. Don't look at it that way. Don't look at it at how many shares you can buy. Look at, well, where's the stock? Where's the investment going to go? Or, or you can, if you put $1,000 and it doubles, it doesn't matter if you got 1 share or 1,000 shares, in the same manner. And just from a mental standpoint, you can always, I used to always play this game with myself and say, hey, this is move the decimal place. This is a $65 stock. Where's this $65 stock going? Well, there's the 500. You can see the 500 pivot. So it translates to $1,000. So, is it possible that this $65 stock is going to go, to 100? Yes, it is. It's quite possible, and it is the leading stock in this area. So you can be sure to spend a lot of time and effort, in analyzing, all these stocks, because these do represent great quality. Robinhood, true market leader, one of the biggest market leaders, and we had a big profit. A super profit. We sold it too early. We sold this stock, I think, on the chart, and there was market risk or something like that.
It was the S&P Friday too. It was when they were maybe going to get in. So it peaked at 78 that day or so, and it was June 6th, by the way.
So June 6th.
June 6th. Yep.
It's probably right here.
Yeah.
Yeah.
And then it dropped, Monday, for a day, because it did not get in the S&P. Funny enough, they let Trade Desk in, and the Trade Desk is down 40% or something 2 days ago.
Yeah, and this just shows you there was no reason to sell it other than we just. We wanted to raise exposure because we thought that, it would come into at least the 21-day, and it didn't. The strongest stock, look at how it held the 10-day, which is the green line, the whole way up. And we recently bought it back on the break of the trend line right here a few days ago.
Mm-hmm.
And so we have to, we have to respect that this is probably, other than Palantir, one of the top 5 leading stocks in the market. And you can see again, look at this green line breakout. So you can see it just broke out. So even though you had all this volatility and churn through here, it just broke out only a couple of months ago. And so, it suggests that, this is going to probably be a 200, who knows, $200 to $300 stock, 12 to 18 months from now.
And it's a market share story that they're just, they're going to keep winning. They didn't even offer retirement accounts till within the last couple of years, which of course is the big, source of assets for most people. And I just find the user experience is so good. And that's something that's important, that, it's a very key differentiator. I've used all of them. I've used Schwab and E-Trade and Fidelity and all that, and it's just the best. It's easy. It's smooth. And there's just a lot of different features that are nice. So it keeps working. That's the thing. People are seeing it, the value in it, and yeah, I think it keeps attracting more money because it's a good product.
And this was, just to put it in comparison, compare it to Schwab. Schwab was one of the big winners that I had, I think in I want to say 1991, I'm thinking, or 1991 or 1998 to 2000. I have to go back and look at those 2 periods, but that was a big winner of mine. And this is probably the young man and the young woman's Charles Schwab now. So you can find many people that are under the age of 40. They're they're moving a lot of money here. They actually have a guaranteed money market rate to a 4%, and they actually pay you an amount if you keep an IRA there. They give you a bonus and so forth. So they're doing a lot of really unique items, and they're all over the crypto area. So when you look at it that way, and you think about crypto and the runway ahead, this isn't over in 4 months. This is, these true market leaders normally last, 8 quarters. Quarter comes every 13 weeks. So that's, like 104 weeks. And this is just getting started in terms of your move. Now it is extended. Wes, go ahead.
Well, I'll let you get back to extended in a second, but like you said, the crypto leverage, I don't know what's going to come of this, but apparently they're like, they're offering the first tokenized shares. They're so innovative. They launched betting markets like overnight. It felt like when they they did the betting markets for they're calling it futures event contracts for like the election. But that kind of just gives you a sense. And then they tokenized shares of OpenAI, which maybe are, maybe aren't, right? It's kind of unclear if that was legit, but the fact is they know how to use Ethereum to a certain extent, and like they know how to build markets on the blockchain, which is kind of where things are going. And from what Vlad has talked about is, it's a much better way of operating a market exchange. And so they're really involved there, and finding the use cases for this stuff. And there's a lot of transaction fees, too, that they're going to get. I think they get like spread fees and stuff, right, for transacting all the different coins. But yeah, the crypto thing it's like, if you don't own any crypto, I mean, this has just a couple of really great tailwinds, including crypto. So yeah, but anyways, Roy, back to, like you said, a little extended and so on.
Okay, the next happens to be what I've written about this on Twitter, on X, a number of times, but this remains our top pick and our most concentrated pick. We actually added to this yesterday, where we actually had a 12% position when the market corrected. 2 weeks ago, we took it down we sold half of the position and took it down from 12 to 6. Then we took it back up to like 8.5, 9, and then 10 yesterday as it broke the downtrend line. And this really looks beautiful in terms of what you would like to see a chart look like. You can see this nice base that it's in, and you can see where it broke to all-time highs, and now it's pulled back, and then you broke the descending down trend line yesterday. And so you're right on the cusp of breaking out to all-time highs. What that looks like on the monthly is right there. So you're in all-time highs. So you can see where you made all-time highs here on the monthly, right there. And now it's recaptured that and retaken that all-time high out. And there's no overhead, no overhead resistance. And, we think that, this stock's got 100 written all over it, certainly by the end of the year. That's what we're expecting. And it could be significantly higher. We think this has the most upside of any security that we're currently invested in. And we think it's only a matter of time before this gets going. Look at it on the weekly, how tight it is on the weekly. You can see this cup and handle. See this cup and then the handle, and there's the breakout of the handle right there. Classic O'Neill breakout of a cup and handle right there. As you can see, it's annotated here on my chart. And so it's just getting going. Now, there has been, a couple of false starts when you look at it on the weekly here, but when you look at it on a longer term basis, it looks quite capable of consolidating and moving higher. So it's a great a chart pattern, we think. And what may happen, and we'll talk about this in a couple of slides, we'll talk about the IWM and the TNA. It's quite possible that money can come out of the large cap growth stocks and move into the small cap and alternative securities like Bitcoin. It's quite possible that we could get a rotation, or everybody participates. And, with $7 trillion on the sideline, we think that's a lot of money that's going to be chasing this market higher, as people constantly expect this market to sell off and come in and come in and come in. But with the Fed put, and now I think the statistics show that there's a probability that they're going to have 3 cuts, two for pretty sure, 3 cuts by the end of the year. That's why every time this market tries to sell off, there's an underlying bid, and it doesn't sell off more than a couple of days because people are underinvested and the institutions are chasing it. And so this is a very, very strong, ideal type of environment that we're in. And, and again, the sentiment is still quite bearish. We have more bears than bulls. And so, the sentiment, because people are very bearish, of course, from a contrary perspective, that's very bullish for the market. So that's setting the backdrop quite well as well. Meta had just an outstanding quarter. And this is one that we actually, I think we took this out. We took this off going into the quarter, if I'm not mistaken. Let me pull this up on the daily. I don't think we carried this into the number, but we bought it the day of the breakout, just like all these other stocks. This stock had a terrific, probably one of the most pristine quarters of everyone that's reported so far. And so we took a position when the stock broke out on the quarter, and we actually averaged in and pressed the position today from a 2.5% position to a 5% position as the stock follows through and continues to go to new high and all-time high territory. So great. Yeah.
Well, it's a great chart. It's going to new highs and Max 7, all that good stuff. And we know what they're doing in AI, and Zuckerberg seems to be like highly motivated and all that, which is great. And part of me when we're thinking about making this purchase and adding Meta and we'll get to Microsoft too, is I'm thinking back about the 2023 year and how it was so narrow. And we sort of missed the Max 7. Well, so that, part of my, our decision, I think, at least in my head, was we got to be a part of these. If the market just becomes narrow, if AI all of a sudden eats everything and there's 3 winners or whatever, well, that's the market's telling us that these guys are going to be one of them. So part of me is that's a lot of why I want to be in Meta.
I remember. Excuse me.
Well, no, that just forget your breath, yada yada. Breath is so bad, all this stuff. Well, this is working. So buy this is kind of the main thought. But
if you can't beat them, join them. And so this is where the money's flowing. So that was huge. For a company this size, that is very rare that you have power like this with the volume and the, in the game. Terrific accumulation. You can see it was the largest. I think this is the largest volume, during this entire basing period and so forth. And that's what that's all that we're doing, and that's all that we think. That the smart money does is follow what the institutions are doing, and by following the volume. This is a perfect example. We actually bought Microsoft today for the first time, just a token position, 2.5%. But there's the quarter, there's the volume. They had their crowd business was terrific. Crowd business was terrific. The build out in data centers, terrific. They got great visibility, terrific company. They own a big slug of open AI, and very strong. So we bought it on this pullback buy coming into the 10-day, turning back up, and you can see you can see based on the chart why we added to the position right here on the break of the downtrend line and the move back up today.
Mhm.
You're not going to get rich here, but if you can make 10 to 20%, and in a couple of these big positions, and they anchor your portfolio to reduce the risk and the volatility in your portfolio, we think that's important. We think that makes sense. It makes sense for us anyway, but many of our stocks have very high average true ranges. And that's the average true range, the 21-day average true range gives us an idea of the type of volatility that you might expect from the entire portfolio. And so this is one of those that doesn't have the average true range that, say, a CoreWeave or a Circle or a lab or a CRDO has.
Mhm.
The next position is this Nebius Group. You might look at this stock as the same type of business as CoreWeave. So they build data centers, and you can see that AI is a prevalent theme of ours, and we think it's going to be the dominant thing. It is the dominant theme in the market now. That is really how we think you get alpha, is you own the stocks that significantly outperform the market. And those that significantly outperform the market, those are the ones that normally have the best revenue growth and earnings growth. So NBIS does the same thing essentially that CoreWeave does. And we bought the stock right there on the 10-300 day, right there. So there's been a character change for us in which we have noticed that this is what's happening right now in the leading stocks. And we think that this is an exhaustion gap in these stocks. We think this is a launching pad. So we think, all these stocks have 20 to 25% upside from our buy point. So we think it's quite possible that, you could take this portfolio that we have, and, it would be quite possible that, we would tack on another 20, 25% holding this portfolio by the end of the year. I mean, that's what we're hoping for. But, there's a lot of ebbs and flows. We could be out of all these stocks within 2 to 3 days. If something happens in the market, and if the technicals turn, and if our indicators tell us to, to reduce risk, we could be out of all this stuff in 1 to 2 days if we don't see what we're expecting. And, if there's an expectation breaker in some fashion, but this is what we want to see. And, in a powerful bull market. And this is really a perfect example as well of a stock that follows through on day 2 of the breakout. You have this huge breakout where that breakout is made. Obviously, some people, they sell right into that, but the strongest stocks, they follow through and are propelled higher after the breakout. And that's got that type of characteristic as well. So you can see what's got this stock going. It's not the earnings growth, it's the revenue growth. You can see 700% revenue growth, 466%, 300%. Tremendous revenue growth. And so, these stocks like this, earnings come later. You get the organic growth just because of the insatiable demand in the product. But they're building out their infrastructure, they're building out their capacity, and many of these aren't profitable at first. That are IPO spinoffs and IPOs, but they they're they have a tremendous moat around them, so that when they turn profit, they just print money. So this is exactly what you want to see, breaking out of a base at the all-time high territory. The granddaddy of AI, and this has been a friend of ours for a number of years, and we've owned it off and on for the last probably 3 or 4 years. Obviously, it's NVIDIA. And so you have this terrific from the bottom. Man, this stock looked horrible at the bottom, and it's just been in this sustainable uptrend as they've continued to exceed their earnings and revenue projections. And despite the tariffs, despite the sales tax, where they're paying 15% of their revenues to China for chips that they sell to China, and the stock is not stopping. So this is this is going to probably end in a parabolic fashion in some manner. And we'll be able to probably go back and look at this and say when the market peaked, it could be this secular trend could peak when NVIDIA peaks. But it is just every time the stock comes in a couple of days, it quickly is accumulated. And so rarely do you have this type of strength. And you can see it broke out at 150. Now it's at 180 and 70. So you're looking at like this stock's can probably go to $250, on this, in the next year on this run before it's over. Great solid numbers. The dominant and the next to a Palantir, the number, probably the number 2 true market leader in the market, next to Palantir. And Rubrik is a security company, and that reported great numbers. You can see earnings and revenue growth were solid, and we happen to own this right here. It's sort of migrating and to the 50-day moving average, so it really needs to firm up here and get going again before it reasserts itself. But you have had some losers in the group, like Fortinet, FTNT. They had a bad quarter, FTNT. There's Fortinet that got hammered on the earnings report. Palo Alto Networks, which was the #1 stock in the group, it's been very, very choppy. Earnings are in 6 days, so it had really sort of a bad response to some type of news. And so you have had some weakness in that area. CrowdStrike, we own CrowdStrike and sold it. We sold it a couple of weeks ago as it lived below the 50-day. Probably our sell point probably was right there. Right in there about 2 weeks ago. We probably took it off as it was living below the 50-day. Many of you are aware of Shopify. Shopify is that's the technology behind Amazon stores in their own right. Great blue chip stock. You can see the nice base that it's in, $194 billion market cap. And there's the catalyst. The catalyst for us is it happened to be the earnings, the response to the earnings, and institutional buying. This stock looks just very, very good, and earnings are out of the way, so you don't have to worry about that. And this is exactly for us anyway. This is picture perfect for us with the type of setups that we're looking for.
Yeah, and it is really nice. Like we talk about buying pullbacks too sometimes, and the fact is when it's not pulling back, that's the best. So that's really nice, right? The way that has barely come in. It hasn't even taken out the low from the earnings day, and yeah, very positive. That's totally different than Axon as an example, right? They're not all going to work, but Axon that gave too much back. Shop not giving anything back. A Lab, not giving anything back. Nebius not giving anything back, but so that's
Yep.
just great. Yeah.
This is a type, these stocks as well, if we owned it, we just bought it on the breakout, guys. So, we didn't own the stock to the breakout. And again, that's how the character we discerned, hey, we saw something unique. We saw what we wanted to see. This is what we've been waiting for, to have this type of powerful momentum in the macro backdrop. We just didn't know what was going to create the macro backdrop so that these stocks would power ahead. And it happens to be, earnings growth. I think, Trump's getting win after win after win, and that's helping the market, the deregulation, opening up in the cryptocurrency area, just the pro-business environment. What's that?
Like you mentioned earlier, the Fed put, I think that's absolutely behind a lot of this too.
Yep. Okay, the next stop is SoundHound. So SoundHound, we had played this earlier, and we bought it 3 days ago on the breakout with earnings. SoundHound, they've got the AI platform for conversational speech, and they're for us here in Charlotte, North Carolina, they're using this technology at Bojangles, and other Taco Bell establishments. And they just signed a deal only a week ago with the company that powers the voice technology at McDonald's and Dunkin' Donuts. So we think the total addressable market is enormous with this company. And you can see it's amazing when you go through these drive-throughs, when, we see the comical things that happen on YouTube when people are going through drive-throughs and they can't get their order because, they can't get their order placed with the receptionist. And, there's a Spanish, this technology, it can be in Spanish or English. It's fantastic. And they seem to be getting all the orders right. So they're utilizing this not for just for orders on the go, but for, for real live orders as you go through the scheme, the list. The queue anyway. So they had a great earnings report, and you had about 3 upgrades. And we actually played it back here, the end of December, and we played it, up, and we got a nice move out of it, but right at the end of the year last year. Then it went dead for a long period of time, and there's the catalyst that got us all involved. And the catalyst happened to be not just the level of earnings, but you can see revenues were up like 217%, and you can see you had that acceleration, but it was the reaction that those are institutions buying this. So we're very excited to see is this technology. It's very nascent, but we'll see. We'll just see if they can build this thing out. But that's what triggered us to get into position, and we got a half size 5% position in this stock at a nice profit now in it.
Yeah, and this not a couple little things too. I know it's really shorted. There's a good short interest. That's always nice. I mean, you never know. But that, that always can make things go a little bit steeper, a little bit faster. And I'm impressed with the liquidity too. That's always important for us. And I think it's a sign that it is like getting institutional attention. When they're trading, let's say close to $1 billion a day, and they're a $6 billion company, that means there's a pretty active market for them, which is that's a good sign for us, because institutions can't, they can actually invest in it. That's one important thing. It's actually investable because of that. So we like that. Gosh, oh, I mean, and it does work. I've used it. I stumbled, whatever. It's great. I messed up my order. I said, oh, never mind. I meant that, and then it fixed. Got it just right, which is pretty impressive. And then I know, and it doesn't really matter long term, because I'm sure we're not going to own this for, I'm not trying to buy this thing for 5 years by any means, but I always wonder if it's just going to be replicable. That's the whole worry I have is, can OpenAI roll this out like tomorrow by vibe coding, right? And that's the whole bearish case on a lot of these other software companies. If OpenAI can literally can they create SoundHound overnight or something? But that's not important, because right now that the action's great. Got an all-time high alert going.
Yeah. So, guys, look, the real move takes place, from 25 to 50, not from 15 to 50. So, pay attention, do some work, do some research on this to see what happens. But it's definitely got the ingredients of being, a big, winner in the future. You love the market. It's huge. The reaction is great. What you want to see is more Wall Street firms come in and recommend the stock. But you did have, I think, 3 or 4 companies that came in and upgraded the stock, in the last 2 days. So that's exactly what you want to see. Let me see if we've got any IBD funds in it. No IBD funds, but you can see where the regular fund ownership is, in a nice uptrend. So, that's, you need more of those mutual funds to come in and buy the stock to keep it going. So, keep an eye on that to see if it can expand its the people that own the stock. It's institutional base. With that, with that theme in the small cap area, and we wrote about that in yesterday. Yeah, was that yesterday that we bought TNA, Wes?
Yeah, it was yesterday.
So, we made a calculated bet that based on how the dispersion between small cap and large cap and value and growth, and how these small caps were underperforming for that period of time, based on that ratio analysis that Wes and I were looking at, and we made the decision to take a position here. This is a leveraged version of IWM, so we actually have a 15% position here, and in terms of the asset allocation that we're involved in. So we got it right. We're up 9% in a day. So you can see it was up today 8.77%. So that timing yesterday happened to be impeccable, and it just worked out for us. And so we think this goes much higher as the market resumes its uptrend, and as we have some leadership in small caps. Let me show you what this looks like. If going back to 2021. Yeah. So this is the kind of move that that happened. This is 2021 September, February. So you had that TNA happened to double just in 4 months. And, we're not saying that we're not saying that it will double, from here in the next 4 months, but that, it's consistently done things like that. If you actually go back to, I think 2000, when you're looking at small caps to large caps, small caps, 2000, 98 to 2000. Well, just look here. This is a long-term version. Look, from 16, 16 to 18 for 2 years. So we're hopeful that we're at the beginning of, some type of multi-year move in small caps, where, over the course of the next year or two, that, it is quite conceivable that you could get a double out of that TNA. But, where it's, we bought it perfectly. We are, we are covered from that, in that rotational piece that we talked about, where if the Fed, which is all but certain that there have been lower rates, and who are the beneficiaries of that? Small cap stocks, small companies, banks, companies that have that lower interest rates are very favorable to their financials and will fuel their growth and expansion. And, as rates come down, the dollar comes down, exports rise. It's just a Goldilocks environment, for the market, in our view. So it's not half empty, it's half full. Yeah, go ahead.
Is that, well, actually, sorry, is that the last one? No, there's one. Okay, I'll let you go. Sorry for Tesla.
Tesla, everyone's favorite whipping boy. And we took a position on this 2 days ago, 3 days ago, as it broke back above the 50-day, right? You can see it was under the 50-day. There was, we didn't hold it into the number, into earnings. We had a position and we got stopped out of it, like right there.
I would have guessed one back stopped. Even, yeah.
And, we got frustrated, and it happens to the best of, it was below the 50-day. And that was when, additional negative information came out. I forget the exact news that took, maybe that was after Austin and the robo-taxi launch or something like that. And it was underwhelming anyway. Wes.
Well, I remember, so the robo-taxi launch day, it hit that 357.54. Right, and that's on that downtrend line where it hit 357.54, and we owned it, and it acted really good, because you would typically kind of, I was bracing for a sell the news type event, and it rallied 10%, and that was surprising to me. And then then it failed, and I think we got kicked out, if I remember, that day below the 50, that first day below the 50 is, I'm sure, when we threw in the towel down there. If we didn't sell any before that. But, I know I keep us engaged with the name, because I just think the upside potential is so insane if they can get all this stuff right. But, and back above the 50, that's what we've always said. When it gets back above the 50, we'll try it again. That's what we're doing. We're trying it again. And, obviously it's an Elon bet and all that good stuff, because he's a maniac. But that's what I remember, and we'll see. I mean, if it holds up, great. It's to me, it's got the most upside out of like any of the stocks that we follow, if they get, if they get this autonomy stuff right. So here we are, back in it again.
Yeah, but between humanoid robots and and the robo-taxi business, and it's been, Dan Ives believes that robo-taxis itself, it's a $1 trillion business.
Yeah.
And he thinks that, he also is modeling human robots as being bigger by multiple factors of autonomous driving, right, Wes?
Yeah, I don't know the numbers, and for me, I guess it's, gosh, realistically, I'm not expecting it to like any meaningful amount for till 2030. So it seems like it's kind of just out there still. It's kind of like it continues to be a call option. I think they're going to figure it out though. I don't think I think it's easier than autonomous driving. I think the environment's much more controlled that they're going to operate in. I think they're easier to manufacture, according to what he says, and it's just I think they're trying to solve the hardest thing out there possible. They're solving for the general case with cameras, and I think they're going to eat Waymo's lunch by the end of it. They're going to completely squash them, because they're going to have 5 million vehicles that are doing this cheaper. So
Just to give you an idea too, the reason that we're kind of going back to the well is I was years ago back here. This is 10 years ago. I was all over Tesla, and this is right where they were. Stock went up on the romance phase before they really actually had any cars. You didn't know if they were going to make it or not. And I tried it a number of times where it tried to break out. And let me draw this trend line here. And I mean, I've never been involved in something that could have changed your life as much as Tesla could have changed our lives because you just got the timing wrong. And I mean, I tried this a number of times. Like, probably all these times I initiated positions and they all went down and I got kicked out. And finally it worked when the stock, had that green line breakout, went to all-time highs. And then you had that move from 20 to, you had a tenfold move.
Yeah.
Tenfold in the next year and a half, 2 years. And so that's why we're not giving up, because of the product mix that's coming and how massive we think it can be. And the real move is going to take place. The real move is going to take place there. And you could, it certainly makes sense if you to wait. You could have waited, but we're trying to get a position that we can build into, early. And that's why that's where we're trying to navigate through this and get it involved in a position so we can take larger size and have some profits built up. Because when we think it's next time it takes out those highs, this can probably be the real deal. Because look, it's going sideways 4 years, guys. So this is going to be a 5-year breakout. And I'm sure we tried it right there on this breakout.
We were in it post-election and post-earnings, so we did get that. Right. We got that run, 250 to almost 500 even, and that short period up there.
Yeah, that's right. We actually bought this there day one. That's the day after the election. And
we were in it post earnings too, back another week prior, on the earnings gap prior to that breakout you're pointing out on election day, because we got it in, and we got in on the number too. I'm saying back where it says 9% EPS growth. I'm saying.
I think we sold it on that key reversal day right there, didn't we, Wes?
I think we did, and then I think we might have tried it again in January and stuff, and just gotten kicked out. But that is a clear sell signal for us usually.
Yeah, and we did. So we did enjoy this nice run right there. We almost got a double, out of it during that move.
Yeah.
So and look at it here. So from a technical perspective, over 338, you could add a little bit more, and it's there. See 340. So you could buy a little bit here. You could buy a little bit at 357.55, buy a little bit more at 368, and you're going to be, putting this right side, the right side of a cup, and that's really, so it gives you an opportunity for the pattern to improve.
Yeah, and well, I was going to add. I was going to pull up this comment, and we can. I know we're basically now. I think that's the last of our current holdings,
Yeah.
except Scott. He called out SE, and we didn't write that one in yet. I guess on our list.
Oh, yeah.
But we did buy SE and CoreWeave, which you can talk about because I know it's one we've been following close.
Okay, I forgot about that. And SE, we did buy SE today on the pot, and we had tried this. Guys, remember as well that you can have, you can try these stocks, as long as your stops and your position size is, it won't chop you up over and over and over again. But it's okay to try these stocks multiple times when the setup, improves or you get follow on buys. And this is one that we just expected this to work. And I don't know when we sold this, but we had bought this stock back maybe after earnings and breaking the 50, we sold it, but we bought it back today on this big volume. Look at the volume. Volume's up 380%, and the stock's up 19%. Again, we want to see this stock follow through tomorrow. But that's the type of prescription that these powerful stocks have. Big moves, and these our thesis again is that this is the beginning of the move. It's not an exhaustion move. It's just breaking out of the base, and it got the exact signature setup that we're looking for. And so look at the earnings that have come in from the stock: 391%, 900%, 300%, 192%. And so you can see that we have a proliferation of these dynamic stocks that have rapid earnings growth, rapid revenue growth. And that's been our blueprint for identifying, these stocks that can double and triple in price. Okay, CoreWeave, CORWV.
Yeah.
CoreWeave announced earnings today. You can see this stock peaked and it came all the way in, and you had this, the timing's right over the last week for this stock to rally. It got, the stock, was down almost 50%, in a month. Then you had this nice rally. They reported earnings today. They missed the number by a slight amount in terms of the earnings news. We didn't see the conference call yet. We'll listen to the conference call when we get off this call. But they also have the lockup expires Friday. So that's when all these people that own the position that you got, I think you've got 83% of the shares are unlocked on Friday where people can sell. So that combination of missing slightly with the lockup, and remember it came public at 40, and now it's at 130. It's up threefold. You're going to potentially have people that want to exit the position and monetize the gain. People that got in it, they've got a 300% profit. They're going to want to take it. So that's going to result in some short-term volatility right in here. So it's got to set up again now. And you see, with the move like this, these patterns typically take a while to set up again. So you can see it's going to be down probably significantly tomorrow. And, you might have downside all the way to 100, in fact. And, it would be conceivable that you could undercut that 100 area and maybe go to 95 and put in a double bottom, come in here, put in a double bottom, shake everybody out. And that would be your entry point, to initiate coverage. And, if that's the case, say it, a double bottom means that you're going to have, if I can draw, it's hard for me to draw this straight down. It's going to come down and undercut, and then you're going to get the move, back up. So, the undercut is going to provide you potentially an opportunity, and then you would come up here technically by textbook, you'd buy it taking out this area, that W part and the double bottom right there. So that's going on with core. Yeah.
Well, I was just going to say too, that it's a good reminder always about, overhead, right? Overhead's always a problem. It's a big deal. To be honest, we missed it, right? It really, the stock, like Roy said, you can build out this base and keep it on your radar because it's this very interesting IPO that's got a lot of really, really strong revenue growth and no earnings yet. But, you missed the IPO move, which was, 4X, 3X, whatever. And now it needs time, and clearly that's what's happening. So, stow it away, keep it on your radar, but wait for the setup from here, really. So,
and this is what was so frustrating for us is we missed this move. We were watching it, and you had this IPO base, and we were thinking that this looked like Google when Google came public, and when Google came public and broke out, and we had a breakout in Google in April of 2005, and I thought it was the same type of setup that we're looking at, but it went down. It went up and down the day that it reported, and it was down significantly during the day, but it closed in the middle of the range, and then it went the next day, and we didn't put the position on.
It was like a 20% daily range, right? So, we couldn't stomach putting it on. I remember and kind of guessing. You really could not tell what the market was going to take out of the report on that report day.
Yeah, what was hey.
And well, I remember too, not that this matters a whole lot to our process, but it's like, what was so interesting is it was getting all these downgrades on the same day, right? There were like 3 or 4 downgrades saying, oh, it's a $40 stock. And so that was definitely causing some of the volatility. There's a wide dispersion of opinions where people are saying sell the stock. But you could kind of tell, obviously the next day when it followed through, it was the market didn't care, what the experts were saying, supposedly.
Yeah, see, you had that day right there, you had a $10, $10 spread trying to
71 to 82.
67 to 84. So, it was down at one point, like $15, and then it closed, off the low. So that's why we passed, and then it went the next day.
Yep. Oh, here, I'll pull up another, I'll go through some more of these.
Okay.
Some of these stocks. I thought this one was interesting. Not that I'm not sure if we'll go for them or not, but something interesting. It looks like these are treasury companies. There's a Solana and SUI. I don't even know what SUI is, but
that's Solana.
Oh, that's Solana too. SUI.
No, it's not actually. Okay, it's not. It's I thought it was, but it's not. So energy, solar, stocks, $95 million.
No, sorry. That's the those are, it's like a coin. So don't instead of SOL, go to DFDV. And I think that he's saying, Akib is saying that's a Solana coin treasury, copycat company, right? So
Okay.
obviously you've got Mr., then you got BM&R, and now we're getting into the more and more speculative.
Yeah, yeah, yeah. We're by no means are we any experts in crypto at all, especially in the token, in the token area. But we do know the two massive growth areas. It's going to be in Ethereum and building out, these smart contracts, and they can be utilized in a number of ways versus Bitcoin, which is a one-trick pony. But we do know those are the two dominant themes. So we're not venturing. We personally aren't venturing out of our lane. We're staying in our lane, and so those are going to we're going to only play, Ethereum, and we're going to only play Ethereum and Bitcoin and maybe some of the custodians like Coinbase and things like that. But we actually held half of our position, I think, in Coinbase and got hammered into the number. We thought that, we knew that half of Coinbase is getting half the revenues from Circle and stable coins. So we thought we knew from everything that we were looking at and reading and seeing, researching, it appeared as if they were going to continue to stay on a great growth track, and they had a disappointing quarter, much like eToro did as well. And but this franchise was the leading franchise, but this action is going to probably take a while to repair. So with a break like this, by no means would we be in any hurry to come back and join the party, so to speak. But it's going to take a while for it to build the right hand side of this base, and we would expect it to take a while for it to build the right hand side of the base. And you have other companies like maybe Galaxy Digital might provide a true crypto shop. It might provide the leadership moving forward. So this Galaxy Digital that is run by Mike Novogratz, they just did $9 billion in $9 billion in sales this quarter, 12 billion, 16 billion. Man, this is a huge company. And so we would definitely keep our eyes peeled on something like this. But look how volatile it is right here. Look how volatile and wide and loose the pattern is. I don't know where you could buy this stock, and not get shaken out right now. It's gonna take some time.
Yeah.
To give you a valid setup again. But we're not playing any of those small esoteric tokens and coins that's out of our bailiwick. It's out of our lane.
Yeah. Nonetheless, interesting. Probably worth commenting on if you guys took those tickers down, DF, DV, MZVT. By all means, just explore that if you would like. But yeah, it's I don't know about the quality.
There's no question. Research them, but we just don't have an opinion on those.
Right. And I'll keep going here just to try to address that, as much as we can. I don't even know, Mara Kuja. He asked this, why don't we own Palantir? It's simple enough. We have owned it and traded around it, but we just got out of it ahead of earnings. We took half off. We had like a 4% position, and we were just debating holding it into earnings. Last quarter it didn't react well. This quarter it did. Earnings, nothing wrong with the stock or company. If you owned it and you had looking back, we've talked about this. We could have held 4%, especially with the profit we had in it. But it wouldn't have moved the needle significantly for us. But it's there's nothing wrong with it. it is the leader in everything with AI within, next to NVIDIA, really.
And we had just gotten hammered in Coinbase, and when you get when you have one of your stocks that you have high hopes for that gets hammered like that, then
Yeah.
it makes you a little bit skittish. And we sold it with a 16% profit the 2 days before the number, because we didn't want to go through a Coinbase where we're up 16%. The next thing you know, we're down 20% in it. But Wes and I, we did talk about it. We had a 4% position. If we had the position, we would have doubled that position on the earnings date.
Yeah.
Because there's the picture perfect date. But we just thought that it's it was just we just thought it was too extended to buy it right here, and clearly we were wrong in terms of, if we bought it like all these other setups, it would have worked and we would have had the position on. But this is a big winner of us for over the last few years, and we had traded this very successfully over the past. In fact, that November we did get a double during that period, and we also bought it back and got that move as well. And so apparently we must have bought it like right here again, because we had a 16% profit, or even earlier.
We bought it. We bought it the day after the earnings, the last earnings report. I know too. That's the thing, because we bought the miss back in May.
Oh yeah, like
that day, or the second day. I forget one. First or second day at the 21 day. Just being a favorite idea. Trying to buy it up support down there. But anyways, that's why we don't own it though, really, and it's still nothing wrong with it. The company's great. It stock's working. You never know. You still never know, right? Even though you've got this leader that I've loved, right? You just never know what's going to happen around earnings. You don't know if it's priced to perfection. You don't know if it's, and for whatever reason, 3 months ago it was supposedly priced to perfection, and now this quarter it's, it's underpriced or whatever based on the reaction. So you just never know. Well, and we and others should probably look to own it if you don't, or whatever. Look for these support days as to own it going further, because it's not like it's peaked here or anything. So I don't think so.
You're starting to see this though.
Yeah.
Where,
it needs to pause probably, huh?
Yeah, so I mean, now it's starting to accelerate. So depending on what happens with this could trigger a short-term peak in the stock at some point. Probably, maybe a big round number like 200 even.
200 to 500 billion. Two different
before it consolidates.
Yeah. And then you just try to buy it for the move to $1 trillion eventually, but I don't know if it needs to take a break or not. What?
And this is a perfect example of, for example, of what we're looking at between earnings periods, where you can see there's the earnings period here.
Yeah.
There to this earnings period. And see, that's what we think is going to happen with all these stocks that we're profiling. And it's not necessarily, it's not a straight line to get there. Look, there's some chop going on here, but you get, you move from, this, low hundreds to, 150 before the number. So that's really the kind of the move that we expect, the second half of the year, and all these stocks that we're profiling for you right now.
Mm-hmm. Here, I'll pull up. Jose is asking about one. I'm not familiar, really, to be honest with. This one, MRCY.
Oh, Mercury General just reported today. So it's this is a aerospace company that absolutely blew it out today. So you can see, I mean, this is a smaller company, only $4 billion. Look at the float. So it's $4 billion. You had the earnings. I didn't see what the beat was, but apparently it was a sizable beat. And you had this 10-300. It's the same type of profile that we're talking about right now. And this definitely should be on your screen. It's a small number of shares outstanding. It definitely, we're going to definitely put some work in. This perhaps is one of the most powerful breakouts that you had. This move here from the opening price to the way it closed right on the dead top. And if this stock follows through tomorrow, that's going to be very, very bullish indeed. And so that's, this is great action. This is what you want to see. Great numbers. Look at the numbers the next 2 years. So this is, this is definitely, Jose, I think this is definitely something that is, that should be on your watch list if you don't own it, already. And look, this is just to give you an example. We had, see how this stock, it looks like, it's extended, it's up 26%. But, when a lot of these stocks do this, see, this is a signature that we're kind of profiling. And, this stock, when it reported earnings at a new high, the stock was 150. 100 closed right at the high, that top of the high of the day. And it was up 41%. And volume was up 423%. And so, if you're looking at, that, MRCY, say, man, this thing's up 40%. I'm not going to buy it. It's too extended. Look, if you would have bought this DAVE right there at 150, you got to double out of it. You got to double. It was up 100% in the next 2 months, before the earnings report. So that's the kind of power, the tiger in the tail that you want. And so, and you had to buy it, see, the second day, knowing that it was up, 50%, on that first day. Another one that, one of our friends and clients pointed out to us also, look at this SEZL. See, this is the same type of profile, and we missed this one as well. But look at the breakout. See, a 52-week high. It had that same signature. The stock was up.
What is that?
40%, and volume was up
500%.
500%. So there was your day, guys. That was the day to buy it right there. Actually, the first day.
Yeah.
That was the day to buy. So don't be, I know many people don't buy breakouts and they don't buy gap ups. But, when you have the market, when the market cooperates and the stocks are right, and, this is a smaller company as well, you get Nirvana occasionally. So we're hoping to get that we're hoping that we got a couple of these, and that, a couple of them work out the way this did. But, the most powerful stocks, like if that MRCY goes up tomorrow, that's going to be somewhat of a confirming signal. Now, an example, and we were, everything that we're talking about now, we've been toying with, a lot of these stocks that are doing that. And see, this Reddit had a great report a couple of weeks ago, and we're having a little bit of FOMO on this because there was your breakout. See right there. But the reason that we didn't buy this one, it wasn't at a 52-week high. See, it was under the high. It was under that 230 area, but they had a tremendous quarter, earnings up 850%. And so this is like probably one of the top, probably 3 stocks that we're looking at that we want to buy. This is one of them. And so it's just breaking, it's close to, it's only 6.1% from breaking out to an all-time high. We're just trying to find out and figure out a way of, how can we get involved, in a stock like that.
Right. Right. Here, I'll go, we can go through a few more.
Okay.
Frankie mentioned this one.
Yeah.
And I know we've tried it here and there too, and it's been just choppy. But
Yeah,
good move today. And the thing, what's annoying, I mean, I owned it too personally, and for my mother-in-law, and I kind of just got fed up, to be honest. 2-3 days ago, I held it into earnings, and it gave back so much. I just got frustrated and said, to heck with it, don't need it. Even though there's nothing wrong with it. And that's kind of, I do like these setups breaking above the 50. I sort of favor them versus breaking out to all-time highs.
yeah,
Because it's the kind of the earliest cheat you can get in just with a potential trend change. But yeah, great follow through. I mean, not great. It was a good day today, sure. To reverse the reversal from the earnings day. Like the idea in general, and I know it's been on our sort of broader list of potential buys since the IPO. Really, it's got a lot of friskiness to it. You can see where it's spiked 1, 2, 3, 4 times in the past, really, where it gets kind of wild. So, it'll continue to be on the list. I'm not sure. We don't have room for it now either, which is a kind of a good problem to have.
yeah.
I mean, we may end up shedding some laggards and pumping it into something like this. But I know when someone asked about my short list earlier, like right at the beginning of the presentation, I think that was one of my 6 that I put on the short list that we don't own and probably want to. So
Yeah.
it's
And
still
it hit our
kind of,
alert today, right there. So, we've
yeah,
been watching it. It hit our alert right there today.
right. So that's
Uh,
it. I mean, we have Hitesh. We just touched on Reddit, but he mentioned this KTOS as well.
yeah. Yeah, great action. Aerospace, it's been a nice area, and it's just like this is no different than a lot of these stocks that we're showing you
Oh,
as well. Great uptrend, great consolidation. The breakout a couple of days ago. It's the revenue numbers that and it's not necessarily the number necessarily that they come up with. What is the exact earnings number? What's important is how did it react to the number? And you had a great reaction to the number. And just say, if we're in this stock, look at the trend line, see that I'd drawn before right here. So there's your buy point. There's your buy point right there. See where it broke this, broke out of this base. And and then if it didn't even break the 21-day the whole time. And then if you owned it, you would have doubled up right there. I mean, we would have, I mean, we would have doubled up. That's how we would have handled it right there. If we owned it right there, we would have doubled up right there in it. And then, you're averaged up, of course, which is great to do. You're averaging up, not averaging down. It looks terrific right here.
mm-hmm.
Again, remember that these stocks that look, terrific, they can turn in a matter of days. So all these stocks, again, caveat emptor, all these stocks and the stories that we're profiling tonight, sharing with you tonight, all that stuff is great, but in the blink of an instant, it can all change. So you
Right.
can't.
Like that Dave, we saw that Dave miss, right, and get crushed. And that's the point of, we're not going to sit here and be an A lab as an example and, make 70% and think we've got this thing that's going to just go up another 70% straight up. If,
Yeah.
we're not in this, we're not sitting here buying anything for, with a very long time horizon. Right. If, clearly people can do that to themselves and get caught up in something like, oh, Dave, man, I just found this wonderful new stock that no one's heard of and it just doubled and I'm killing it. But, yeah, I don't think I think we're in this for that intra-quarter move that Roy pointed out for like Palantir just a little bit ago. That's what we're looking for, these intra-quarter drifting moves.
This showed up on our screens. Brothers Coffee. I'm sure you're all familiar with this, but we're wondering if something changed on the earnings report. It had a good response to the earnings report, and so it's not at an all-time high. It's not one of the strongest, but you've got pretty much low risk. So if you could easily buy the stock and use that low of 2 days ago for your stop, and that would be a very attractive risk reward. I think anyway. So that just hit, that's very interesting. And this stock also could give you some diversification from just all AI and all technology.
Right. Right.
Rocket Mortgage had a good report. And if interest rates are going to go lower, and look at this 64 million shares right there, and it made this bounce to right here and came in, and then you had the earnings report that also facilitated this move higher. So this is this makes sense in terms of rotation into housing and into the mortgage lending stocks and things like that. So this is quite interesting, as well. That's been off the radar, but that you can't hide from that 64 million shares that were bought. Highly liquid right there. So.
Yeah, I pulled up this other one from Hitachi. Just pulled up app, which we talked about the roller coaster of that after hours and everything. We don't own it, and but it's been, it's been surprising to me the resilience of this stock in general, because I still fully don't understand what they do, and I didn't know if it was as legitimate of a company, back when it broke out at $90 a share, but here it is. It's got the staying power above 400. I thought the move was completely going to be over from that 525 peak.
Yeah.
When it gave it all back in 2 weeks. I thought maybe, okay, it's over, but it turns out, it's not. It's normalizing sort of these 300, 400 level and everything. Apparently, they're one of the top two contenders. Them and Robinhood, it sounds like, are have a really good shot of getting in the S&P 500 next rebalancing. And the earnings growth just continues. I mean, that's pretty impressive, from negative 50 cents to $1 to 4.50 to 9 to 13. Is pretty serious earnings growth, and it should be, again, on your radar. It's a great reaction to earnings overall on the quarter, and man, it's really turning into a big stock. I mean, 150 billion is something serious now. So it's interesting to me. I really need to understand what they are doing.
Yeah, and we were watching it, because we had all these. You see, I had an alert right there on it as well. We were watching it, and in fact, we were. This is the kind of thing that we're looking at to see. The past, was the past leader. The numbers in the past were, very good, can it recapture its glory? But after market, this is how things change, and that's why I want to listen to the CoreWeave quarter to see what happens there, because it's showing down $15, but this was down $20 after market, and then and then it just took all this out. So if you happen to be watching it and then it took out that alert, that would have been your time to buy it if you're sitting there watching it, and we just let it go because of that down $20. Let me see what it looked like on the 10-minute chart so you can see.
Does it even have
It was
pre-market, right, where it was really getting crushed?
Yeah. So it was way down here, like maybe 350 or 60. It was down 20, way down here after market, and then when it opened up the next day, and if you're sitting there and you're watching it, when you took all this out, that's where your alert should have been, right there, and there was your buy point, like right here. And again, this is this the 10-minute? Yeah, 10-minute bar.
Yeah.
So there's your opening range breakout. See the first 30 minutes, right there.
That's hard.
Your buy point right there.
If you're buying at the on the open too, you're in it at 400, 410, and then 10 minutes later, you're down 5% in it at 390, and then another 10 minutes. So it's like, realistically, we look at those and we say, we missed it, and how rightfully so. That was a hard one.
Yeah. Yep. PW. There's more in these companies that are doing
like infrastructure,
construction.
Yeah.
This PWR is bouncing off the 50-day. They've got, this is a nice company, 58 billion. So they should be in the middle of this build out in the infrastructure.
By the way, yeah, with that PWR, I think sometimes we go to STRL, and Kathy she actually pointed out Sterling and a few others.
Yeah, so this looks outstanding. Outstanding. There's the breakout on the number, just consolidated. Great. This has definitely got leadership. A potential and ability. Like when you look at this too, when you look at like Sterling versus PWR, you want to buy you should favor the ones that are acting the best. Like I pulled up that PWR.
Yeah.
It's at the 50, but this Sterling is much stronger. So you want to buy the ones that that are the strongest, not necessarily the weakest in the area. There's GVA. See, that's in the group. Look, this is the number one group in the market right now, building heavy construction. I saw MTZ, a 90 relative strength. They reported their quarter. So you have some great leadership in this area. This AGX, which is they specialize in they really specialize in gas plant power companies. And this is a small company that's not known that well, but this is intriguing to me. I've been following this a little bit. Earnings are in 23 days though, but smaller company that that's got great, the numbers are really solid. So follow the numbers, guys. Follow the numbers. Follow the volume. Follow the institutional buying. That's the hope. That's the key and the clue.
It is. I'll pull up one more.
Okay.
And maybe we can wrap it up. But
okay.
Just Hinge. I don't know. I don't have much to say, but if you want to touch on Hinge, I'm not sure.
The only thing that I would say here is I can't imagine, they specialize in physical therapy on the using the internet, using your computer and so forth. And I'm not exactly sold on, I guess it's sort of like Teledoc, a little bit like Teledoc. I'm not exactly sure, but I think you can talk to your physical therapist online, on video, and I guess
Yeah.
he can map out a program for you, and you can maybe discuss your workouts with him and things like that. So you can do
Yeah.
that online. So I don't know how well this can go or not. So
Right.
I'm not exactly sure.
But hey, IPO either way, IPO,
Yeah.
but those things, those volatile IPO bases they're tough to trade. I mean, if you and Jose, I think you have something like, how do you enter it? I mean, it broke out at 52, so you look for it to come into 52. I suppose as close to that as you can get would be, something worth trying if you're,
Or on this, it looks like a key reversal today too, Wes, where
yeah,
you could buy
right, and the
this, take
stops
out
today.
today's high, using
Yeah,
today's low as a stop.
pretty much, because the low of that is like $53, and yeah, you can risk a little bit there, right, by just having your stop.
53 is the 10-day, and so that probably presumably would be your downside. Guys, with that being said, I think we're going to call it. It's been 2 hours and 35 minutes. We thank you so much for attending today, and for those that weren't on the call that happen to watch the replay, we hope that it's beneficial for you. It's always a pleasure doing this. We love doing it. We hope that we provided you with some great ideas and maybe some tactics and techniques that you can utilize to improve your investment results. That's why we do it. So we hope that we energized you tonight, and we're certainly excited about the future. Without getting too giddy about it, we're very we're pretty optimistic. But again, we'll reverse our view instantaneously when the facts change. But it's
Mm,
certainly stacking up to be like a very promising year when all is said and done, as we get through the Fed, and as we get
mhm.
buoyed by the Fed's rate cuts and so forth. So again, thank you. And Wes, thanks for showing a Campbell to the audience tonight. We
Yeah, a
hope
little
they
bit
enjoyed.
there. Great. It's first time on camera. All right. Bye, everyone.
Bye, everyone. Thank you.